Politicians just want to hit the print button. Give you money, vote for me. That's the way the world works, sadly.
Today, Real Vision CEO Raoul discusses his prediction for the last part of 2023 and believes that we're now months away from a catastrophic event. The collapse we're seeing of many countries' fiat money systems indicates that the situation is extremely dire. The recent inflation numbers are also a signal of these systems' instability and is surging as we speak. Raoul emphasizes that the repercussions are tangible, impacting people's ability to afford housing, food, and energy. And soon we'll see an inevitable run on the banks. He points out that not only is the economy spiraling out of control, but an abundance of money printing and misallocated investments is contributing to capital disappearance, which will be put on display as we start seeing more banking collapses in the months ahead. Let's get right into the latest interview with Raoul as he gives his market prediction for the last part of 2023. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. So to give out as much value to you as possible, we're sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
But the spoiler alert for me is I'm really bloody bullish, and I've been bullish all year. And I was starting to get bullish at the back end of last year. And so far, that's played out well. My main bets have been crypto and tech, and they've both had phenomenally good years. In fact, the Nasdaq's had one of its best ever starts to its year. There is always volatility involved in markets as well. And the market's job is to try and throw you off. We're focusing on now, boom, bust. It's that crash, or are we in a next bull market idea that I want to go through. Let's go into the crash scenario. I don't think it can happen. This quote from Yellen is something very interesting. This is not a flippant comment. I think they know exactly what they're doing, which is that Yellen expects no new financial crisis in a lifetime. Now, we all laughed when we saw this back in 2017. I didn't understand it. I don't think most of us did. A financial crisis is when the value of your collateral makes your debts unpayable. Once you have quantitative easing, you optically make the rise of the collateral rise in price, and you can lower the interest payments. That means you can't have a full crisis. There's no way of doing it. Even at government level, Japan has shown you can't have the crisis because you buy your own bonds and print your own currency. Yes, you can devalue your currency, the assets rise. Can we have banks going under? For sure. What will the Fed do? More cowbell. They will print money like they did what happened in March, and they will stop it. And then it happens again, and they'll do it again. Let's say some massive borrower like AT&T starts struggling. What will happen? More cowbell. So this construct is to stop the system falling apart. Right now, generally speaking, most people have missed the massive rally, and so they're hoping that the market comes lower. So we've seen that from the institutional surveys. People just haven't been involved. So a lot of it's been retail and passive money, index funds, stuff like that, without people actually making money from it. And that's always interesting to me because we come into year end, and it tends to mean that somebody's going to have to make a decision how they want to report to their investors at the end of the year. And the pension funds and others don't want to show that they were massively underweight equities all year. I've got some strong views about the rest of this year as well. Now, the markets have been roughly trading 2 to 4 months ahead of the business cycle. In some cases, stuff like technology and crypto, they've actually been even further ahead than normal. And then we've got the central bank. Well, they're lagging with the ISM. If we take the ISM as where the economy is today, because it's basically a real-time GDP indicator, well, the central banks, well, they're looking for CPI to come down and unemployment, and those things are really lagged. In some cases, 6 to 8 months, and when we get down to the big inflation stuff like shelter inflation and wages, I mean, they can be over a year, sometimes 2 years lagged as that keeps changing. So, okay, that's now you understand where we are.
Amid this fiscal tightrope walk, Powell discusses the economic indicators we're seeing, as well as the debt dynamics and the pivotal role of central banks in shaping the market in the last part of the year. With an air of urgency, he also highlights the mounting concerns encircling the colossal $6 trillion debt maturation slated by year-end.
And I think most of us realize we've had a recession. I think most businesses have seen a slowdown. I think many people have laid off jobs, and we're seeing, and I'll come on to jobs later, a change in the job structure. But that recession has not been called yet. We've seen the economic data, the GDP data, still somewhat buoyant. But I think it's there, and I think when all is said and done, the recession will have been called during this year. You can see, interestingly now, it's rolling over somewhat. That's based on the fact that the dollar's gone up recently and rates went up recently. So it tells us something that we may see growth slow down or have a soft patch. Financial conditions get a bit choppy going forwards because of what we've seen with interest rates and what we've seen with the dollar. But I think that will resolve itself in lower yields and lower rates. I'll come into why the lower yields later. So this is why I remain bullish, and we'll go further out in due course. Okay, the next part that people talk about all the time is inflation. Well, inflation's sticky. Again, everyone's looking at today, and you hear the central bankers saying, well, inflation is too high. Well, the forward-looking stuff is vastly different, and they know that too. I think they're doing it to engineer an undershoot because they need to finance the debts, something I'll come on to later, and something I've talked on Real Vision about. So the inflation side of the story, look, this is a very ordinary inflation cycle. Yes, it went higher because of the supply issues. I don't see sticky inflation anywhere. So therefore, we think that the central bank is going to be much more active than people anticipate. The other thing people talk about a lot is there's going to be a credit crunch and the market's going to crash. We've all seen the banking situation. I get it. There is a credit problem. And you see, if we look at bank lending year on year, it's starting to go lower. Of course it is, we're at that point of the cycle. But it also means that the cowbell, the monetary stimulus, the printing, and even the ability in an election year to add fiscal stimulus grows. And I think they want that. I think they want the excuse to stimulate. And I'll come on to why, but the election side of the cycle, of course they do. They always do. Politicians just want to hit the print button, give you money, vote for me. That's the way the world works, sadly. We only need to worry about that stuff at the end of the next cycle, when inflation is coming back and rates are going back up. We're the opposite of that right now. We've got a lovely 18-month period of rate cuts, stimulus, and all of the good stuff. That's what you should be focused on. You shouldn't be focused on these other red herrings. They only matter when the cycle rolls over.
Raoul Pal uncovers how changes in cryptocurrencies can send ripples effects through our wallets. Imagine a world where borrowing money becomes more expensive. Those cool credit card deals and car leases might not be as sweet. But it's not just about numbers. It's about fairness and how many things we can buy. Among the market noise, Bitcoin emerges as a rebel in the money world, shaking up old traditions. Powell points out that the everything code is like saying money is this invisible thread that's connecting it all together. With big banks being the guardians of balance, he says they're working behind the scenes to keep things steady, preventing financial chaos, but he believes the inevitable is coming. What do you think about the latest interview with Raoul Pal? And how do you think his prediction for Bitcoin, crypto, and the financial market plays out in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.